How's it going, peeps? Welcome back to Viva La Coin. I am Joe. I will be your host for today's episode, and we are going to look behind the scenes at some different things going on in the cryptocurrency space in regards to all the selling that just occurred over the past week, all the way up until the point of max pain, where a lot of people wound up dumping their alt positions. Those altcoins across the board, even the fundamentally strong ones, seem to be down 50 to 70% across the board during the early hours of Sunday, at least if you're on the East Coast like me. But around the world, everyone sort of suffered that same loss in their portfolio. And anyone that is a hardline chartist, I don't care about the news, I don't care about manipulation, I only read charts. Everyone is flipping bearish, and they're calling for a bear trend. They're calling for Bitcoin down to 20K, down to 12K, and so on. But it's not like that doesn't happen every other massive dip that we have. It's just that this one was really well orchestrated, and depending on how the market goes, it could head in that direction. What I want to do is look at a couple different things that sort of tell me that I don't think we're going in that direction. And ultimately, all of this information is just so that you can make the best decision for you. If you entered into the market, or if you've been here since last year, however long you've been in, and you watched everything go down by 50, 70% over that week, and you were just sick to your stomach, and you were like, it has to go up or I'm fucked, then you should probably, upon any of these rebounds, take a little bit out and de-risk a little bit, because you do not want to pin yourself in a bear market if that were to occur. Now, is it? I don't think so, but could it? Absolutely. Anything can happen here. It is still an evolving space, and even though we have historical data, that doesn't necessarily mean it 100% has to go the way that we intend from point A to point B. So, as always, I am not a financial advisor. I am not an oracle, nor am I a fucking wizard. So take this information and go and do your own due diligence as we explore what is going on in the space. Any comments, questions, concerns down below, please feel free to drop them. I'm always happy to interact with everyone down there as well. I'm going to make myself a little bit smaller here so I'm not blocking anything. But right now, just looking at Bitcoin, we're sitting around 38K. Now, if you were sitting around in the markets on Sunday, we dropped all the way back down to $31,000, which, although it wasn't the all-time, recent low that we had of $30,000 that was bought up almost instantaneously, this one stung a little bit more, because any of the alts that were holding strong positions, even during that real quick bounce in recovery, they really started to bleed out. We got all the way down to, I believe Cardano was like $1.05. Polygon went all the way back down to 70 cents from a recent all-time high at $2.80. And some of the other strong ones, including Ethereum went way lower than what a lot of people anticipated, and that is because Bitcoin runs this market. I've seen so many people time and time again and say, well, that's why I'm holding Doge, because no matter what, Doge is going to pump if Bitcoin dumps. It won't. Every one of these coins will follow Bitcoin. Bitcoin runs this market. So anyone that wants any alt project that you're in to succeed, you should want Bitcoin to succeed as well. Now, when we actually look at the space in total, we're at about $1.6 trillion as of today, which means that we blew about $1 trillion out of the market, or it's just worth that much less. But I always say it matters not so much about the price day to day, because the price is only about what people are willing to pay for that asset on the exchange to and from each other. But that still doesn't change the fundamental ideas behind the total amount, scarcity, supply and demand, which is why the stock to flow model, even on the lower band of that, which is what Plan B was tracking in his Bitcoin price projections, that's been pretty accurate thus far. Even on the lower band of that, 30K is still possible. Now, we don't want to linger here for too long, but it doesn't inherently break that model. So one really important tweet that he put out, and I want to sort of frame the next couple of things I'm going to talk about with this tweet. This is the most important piece of data I think people need to understand. When there is mass selling in the markets, everyone thinks, well, that's because all of the Bitcoin is being sold. And in that case, I got to dump mine too. I got to cut my losses. That psychology and that fear sort of takes over. Well, that fear really dumped down about as low as we've seen it It was actually the lowest it's been since March 2020, when every market crashed due to COVID. We were all the way down to a 10, which is sort of astonishing considering the fact that we were up around like the 90 range for most of February to April. So no matter which way you cut it, this was a necessary thing. Between all the shit coins, all the Doge stuff, Musk on SNL pumping all that shit, along with all the other stupid news coming out, and everyone jumping into the market recently, it had to shake out. There is no market on earth, and I'll keep saying this, where everyone can be profitable. So what happened? Massive shakeout, pushed all the new people, all the new wallets that were created over the course of 2021, force them to sell all the way down. You drive that pain as far as you can and get them out of the market, and then they buy up the crypto that's sold. And that is what Plan B was breaking down, the guy that actually came up with the stock to flow model. And this chart that I'm going to show you here in a second is the most important thing I think we all need to recognize. So what he said was, in the chart you see at what price level each total of the 18.7 million Bitcoin was last moved. Because remember, there's still about 2.5 million left to mine, 2.3 million left to mine over the next 100 years. But there are 18.7 million available, some of which are lost and can never be recovered. But it shows when they were last moved. So what happened in May? Weekend sold approximately 1 million Bitcoin, not $1 million worth of Bitcoin, 1 million Bitcoin in May at approximately $30,000 to $35,000, which they bought in April at $55K to $60K. So they sold way lower than what they bought at for a staggering $20 billion loss. And then he follows up with the good news is these 1 million Bitcoin are in strong hands now. And this chart actually shows who was selling and when they actually accumulate those Bitcoins. And the whole point of driving the market down and scaring everyone else and telling everyone sort of in an unfounded way that we're in a bear market, even though most of the overheating metrics, most of the historical data is saying that we aren't, is it creates this fear that people have of losing money, more money than they've lost already, or being wiped out completely. And the moment we hit that point of max capitulation, everyone lets it go and accepts their losses and sells, flows right into the hands of these either institutional buyers that were setting up that manipulation, or just other people in the crypto space that understand where everything is heading in the long term. Because remember, day-to-day price doesn't matter as long as we get from point A to point B. But it by no means is it easy. People walk into cryptocurrency and assume that, oh, it's a piece of cake, I just buy and I sit on it. But it really is a psychological test on every level, especially if you're heavily exposed to it, like myself and some other people I know are. It's information like this that can help justify your decisions to not sell, especially at the lowest point, and then buy back in higher. Now, a couple things. One, I still do believe that we will see a little bit more of a shakeout. We've seen some volatility down to like 35K. This morning, we were down to about 36.5. Just some of that shaking out. And most people that are charting their TA and believe it's eventually going to be the bear market in a month or two, they're saying, oh, we're going to go back up, test 45 or test 51. Those levels of resistance, we're going to bounce off and plummet back down well below 30 into the 20s. Now, if I were the whales manipulating this market and driving it up and down, what I would do is I would do just that because everyone's calling for it. I would allow it to come up to 45, maybe 51K, maybe 58K, that top level of resistance prior to new all-time highs, and I would plunge it straight back down, maybe even wicked below 30K. Everyone panics, everyone leverages up their shorts, and then you just pump it straight back up, wipe all of them out of the market too, scare everyone else out. I think that would be the best way to shake out the last hands in the market. And what I'm going to do personally, not financial advice, I'm going to, as soon as we get around those levels, around like 45 to 51K, I'm going to take just a little bit additional profit out of some of my old positions. I'm going to move it into stable coins. Worst case scenario, we dump and then I can buy cheaper. Best case scenario, we pump and yeah, I lost a little bit and I buy a little bit more at a loss, but I de-risked a little bit. So that's probably how I'm going to take it. Now, when most people are saying, well, most corrections that we've had in the past have been between 20 and 40%, and we've never seen a larger one than 40% in active bear market, I wanted to pull up this historical correction breakdown. It was actually posted by CZ, who is the founder and CEO of Binance in their BNB token. But in this chart, it breaks down all the different percentages that we had. And here was our current one at 51.1%. If we take it all the way from the top to the lowest point that we wicked down to around 30K, all the way to, I believe, on the derivatives exchange on Gemini, it went down to like 28.8. But if we go back and we look at the larger trends, we see in 2013, this other bull cycle that, remember, history doesn't always repeat, but it tends to rhyme. I showed you in my last video how there was a double top in 2013 where it shot up way too fast and everything was way overheated, and there was a massive blow off top there just to cool down the market. Unlike the end of each bull run, which typically happens slowly over the course of a month or two, that blow off top was very swift, just like the one that we currently had was. And that dip, unlike ours at 51.1% that we currently have, that was 82.6% in the middle of that bull run, April 2013. And then it went on to have another 50% dip in November, and then it went on to hit new all-time highs at right around $1,163. But at the base of this dip halfway through, it dropped all the way to 50. So it went on to increase another, 20x. But in order to get there, all the other weak hands had to be shook out of the market. And a lot of people are saying that we may have an extended bull market or cycle with a miniature couple month long bear market in between to allow those whales or big players or institutions to accumulate. And I'm going to show a couple people that I believe are accumulating at this point or driving it down in order to set up infrastructure for this next stage of the financial world. But first I want to show real quick, Michael Saylor, who was the first really well-known institution to buy into Bitcoin, has been reaching out to Elon Musk about his mining concerns and everything else. And he actually set up this meeting with Elon Musk and all the mining companies in North America to try and find a better way to accelerate sustainable mining solutions. Now, although we know a lot of the Bitcoin mining is renewable, not all of it is. And I'm not saying that it's not a problem. I'm just saying that Bitcoin's utility against a complete shit show of a current financial system is justified compared to the amount of energy that it costs compared to what we currently do now. But what he came out and said was, yesterday I was pleased to host a meeting between Elon Musk and the leading Bitcoin miners in North America. The miners have agreed to form a Bitcoin mining council to promote energy usage, transparency, and accelerate sustainable initiatives worldwide. And then that was in response to Elon Musk tweeting right prior to it, spoke with North American Bitcoin miners. They committed to publish current and planned renewable usage breakdowns and ask miners to do so. So potentially promising, he says. Now, Michael Saylor and the rest of all these banks and institutions and everyone else that's getting into Bitcoin, you could say, oh, the banks are in, they're just going to run it down or run it up. Well, no, they're going to accumulate it, then drive it up just along with everyone else because then they have it. Their infrastructure set and people are going to have to come to them for it. Us setting up a central bank digital currency, like just with the current banks, it's no different than fiat currency. It doesn't do anything different. They can just generate more of them. It's not really going to fix any of these problems, and it wouldn't be global in the sense that Bitcoin is with those final settlement layers and everything else that's in it. So I'm happy that they're working together to do this, and Bitcoin actually pumped about $1,500 after they had this tweet exchange. Now, the effect of Elon Musk's tweeting about Bitcoin to and for its use case is getting slowly diminished over time, which is good. Like his first tweet that he put out, he put like Bitcoin as a hashtag in his Twitter bio. It pumped it, I think, like 4K over the course of the day because a lot of people respect his outlook and his opinion, and we know that he knows about Bitcoin and what it does and why it's valuable. That's why Tesla bought it, and that's why they haven't sold it. But in the meantime, to see that diminishing effect of him mentioning all the information about it, or he could come on, just post some shit and it's not going to collapse it by 10K or even pump it by 10K. I look at it both ways. Just like I don't want a 10K dump because he says something completely off the cuff, I don't want a 10K pump because he says something completely off the cuff. That creates an unsustainable market, and a lot of people FOMO in and they don't know what they're buying and they don't have that understanding or conviction to hold it when we have those shakeouts, and it weakens the market. So all good things there, and you saw it ripple through other stories that conveniently are all coming out directly after all the bullshit information about China banning Bitcoin, which they're not. They're just tightening the same regulations they have on miners, which is good because the more they shut their miners down and push them over towards us, then they won't have all the hash rate, and people can stop fucking saying that China's just going to pull the plug on it because it's distributed even more evenly. So this story came out. So digital asset hedge fund One River files with the SEC to create a carbon neutral Bitcoin ETF. And that's going to be this recurring story, I guess, over the course of this bull run, that everyone's talking about carbon neutral as if that was the big fucking problem and not our just very dangerous situation in the current financial world. But you know what? If they're on board for it, that's fine. One River, the digital asset hedge fund backed by billionaire investor Alan Howard, has officially filed to create a Bitcoin exchange traded fund that incorporates the purchase of carbon credits in an effort to make a carbon neutral Bitcoin. Essentially, they don't want to be burning coal while they're mining it or doing these different things. So, good for them. Do I think that their ETF is going to be approved over any of the other ones? No. I don't. I think the U.S. will continue to drag their feet on that nonetheless. But still, you can see that people are paying attention to the environmental narrative a little bit more. And then Marathon Digital Holdings, which they were one of the first big companies to come into Bitcoin. They bought about $150 million worth of Bitcoin earlier in 2021, back in, I believe, January. So they said Marathon Digital Holdings announces binding letter of intent with Compute North to host 300 megawatts of Bitcoin mining in a new data center. So this is just furthering the push to redistribute some of that mining and hash rate power that secures the network, that makes it stable, that makes it incorruptible outside of Asia in general, but especially outside of China. So I view this all as good news, and I view it all as really a dangerous, overblown way to address a couple problems in the way that they were positioned, but it was meant to solve two problems at once. You can bring more focus to some of the issues that people were still working on fixing, as well as scare every retail person out of the market because they don't care how many of your lives they've ruined. They don't. Now, on top of that, right after the main dip on Sunday was over, Ray Dalio comes out and says that he bought Bitcoin despite saying governments may ban cryptocurrencies. Interesting. So if you don't know who Ray Dalio is, he runs the biggest hedge fund on the planet, Bridgewater Associates. And it's funny how right after that dump, right after everyone else gets scared out of the market and says everyone's banning it and it's not going anywhere, he just comes out and says, yes, I in fact do own Bitcoin. So Bridgewater Associates founder Ray Dalio has revealed that he owns Bitcoin despite concerns he has voiced about governments interfering or even outlawing cryptocurrencies. The boss of the world's largest hedge fund said Bitcoin's greatest risk is its success. So he knows that they're going to try and continue to shut it down or continue to point out the additional energy it uses, but he purchased it anyway as a hedge against all the inflation, all the damage that's about to befall our current economy, and how unsustainable that is. So just wanted to point that out because all this, every time there's a massive shakeout and everything's dumping, you don't see all these people come out and say, oh, I told you Bitcoin was trash and I didn't buy any of it. You just get news story after news story about different hedge funds, banks, companies, billionaires that purchase Bitcoin in those dips because they fucking orchestrate them so that they can get a better buy-in price while shaking everyone else out. And then on top of that, ARK Invest, who is the main hedge fund that has been pushing Tesla and backing Elon Musk throughout the last 2 years especially, and Kathy Woods, who runs that investment portion of it, they came out and said that they purchased $20 million worth of Bitcoin. And I know that she's had conversations with Elon Musk about Bitcoin's energy usage. I mentioned in one of my previous videos that she believes that Bitcoin is actually a benefit for the environment because it incentivizes people to use renewable energy in their mining, because that is the biggest cost of mining currently right now around the world. It takes a absorbent amount of energy, and if you can replace it with something that is carbon neutral or just renewable in general, then you're going to be able to make more on that investment. And I also mentioned previously that Elon Musk, yes, he has a car company and a space company, but he also, by all intents and purposes, has an energy company with Tesla. And he can make solar panels and do all these different things. So I said he's probably going to view it as an energy play as well, where not only can he hold Bitcoin and make money and try and push the market the way that people need it to go, but then he can profit by helping to set up this mining council with Michael Saylor and everyone else and put sustainable Bitcoin mining in place. And then right in the choppiest part of everything going on, Monday morning, after the markets just bled for 7 days straight, how convenient. Goldman Sachs comes out. Bitcoin is officially a new asset class, says Goldman Sachs. It's time to take Bitcoin way more seriously as an investable asset, says Goldman Sachs. Bitcoin is now considered an investable asset. It has its own idiosyncratic risk, partly because it's still relatively new and going through the adoption phase. And that was said by Matthew McDermott, global head of digital assets, in a piece of research. And it doesn't behave as one would intuitively expect relative to other assets, giving the analogy to digital gold. To date, it's tended to be more aligned with risk-on assets. But clients are beyond, really that fear at this point, and they want to be a part of it. And if Goldman Sachs has their clients coming out and saying, we want to be able to invest in this, why don't you offer this? And they just refuse to, then they're going to go somewhere else. Just like people in countries that ban it, that say you can't use it, they wind up buying more of it than ever. So it's a very difficult thing to get away from, and they're trying to find the best way to set themselves up to be able to custody it, sell it, have people buy it, and all of those things. And they can't do that if they don't own any of it. So when you talk about, well, who bought that $250 billion worth of Bitcoin or cryptocurrency when the market tanked? Well, people like this. So they can afford to go to their wealthy clients and put everything in place for them. And then afterward, when the new infrastructure's up and no one really moves towards centralized digital currencies because they're just going to be as fraudulent as our current system is, they're going to have their roadmap in place to be able to work through that. Now, a lot of people did come out and say Ethereum is likely to be even more valuable in contrast to Bitcoin, just because they view it as a store of value as well. If EIP 1559, which is the update coming on the London hard fork in July, is successful and it makes it deflationary in nature and the system works properly. I still personally, I barely have any Ethereum. I still have a small position, but a lot of my eggs are in the Cardano basket, just because I think that once their smart contracts are live in the next 90 days, people are going to understand that it's leaps and bounds more laid out than Ethereum is. I think Ethereum is just first to market, has the network effect, and a lot of people are buying it. But I think that that's super good news for Ethereum holders as well. I want Ethereum to be successful because then it helps the altcoin market in general. But it's these large banks and clients that are trying to push people out so that they can get in. And then finally, at the same time, Coinbase hires ex-Goldman Sachs executive to ramp up policy push in Washington. So Coinbase is adding some firepower to its lobbying team. The crypto exchange announced Monday hiring Faryar Shirzad, I hope I pronounced that right, I don't fucking know, as its new chief policy officer. Shirzad served 15 years at Goldman Sachs, most recently as their co-head of government affairs. Coinbase CEO Brian Armstrong tweeted about how he went to Washington earlier this month in a bid to help answer questions about crypto for U.S. lawmakers. Shirzad will pick up the torch in that effort as the cryptocurrency industry comes under increased scrutiny from Biden's administration. So they're not going to want to just make this easy for cryptocurrency because it undermines everything that they currently do. And there's a lot of money interest and big business and big tech and banks involved in everything. But it helps if you're bringing over those same people from the banking sector into cryptocurrency to help make a little bit of a knowledge bridge or close the gap of understanding as to why this is going to continue to eat into centralized finance and why it's important to stabilize the market before shit hits the fan. Because again, I'm not against regulation. I'm not. I think that it legitimizes everything and it helps people understand what they need to do with their profits and how people can and can't invest in this. I'm also not against them driving the price up or down. If it is a free and open market, I mean, yes, you'll have price collusion and everything else like that, but they can't print more Bitcoin. That's the number one thing, is they can't make more of it. So if you have some of it and it is super scarce and it does hold its value as that store of value, and you can't send it to anyone in the world, regardless of what anyone says, then okay, then they can fuck with the price in the short term, but they cannot manipulate the total amount or its use case at all. And I'll keep going back to the same thing that I'm telling everyone else. When I think about everyone switching over to this bear scenario where, this is the start of the bear market and it's going to drop down to 12K and alts are going to drop by 99% and we're just going to sit super low for 3 or 4 years until the next halving cycle. I mean, statistically, it's probably not going to happen. Probability-wise, it's probably not going to happen. But yeah, sure, it could happen. However, when I ask myself, has the use case for Bitcoin or some of the major cryptocurrencies changed? No. Okay. Has the scenario in our money printing or how our economy is functioning changed? No. So I can sit here being down a significant amount over the course of the past couple of weeks and still feel confident about where my money is sitting. Ultimately, if I did think that it was going to drop by another 60%, then I would put things in the stables, and I'm still going to, if we pump up to around 45, 51 relatively quickly, I'm going to move some over. But I'm also in what I believe are fundamentally strong projects that even if there is a couple months of downside, even if there is all this other bullshit going on, as this continues to be adopted, which it will, and as more banks and people offer it to their rich clients, which it will, and as our economy and the US dollar and everything else continues to get fucking hammered, which it will, then we will just continue to be holding strong projects where that value will return to them. In the interim, I am not going to fold just based on 4 days of the market dumping. And if you look at the previous end of both cycles, they ended very, very slowly. Like, yes, it did drop by 85 and 82% over the course of a couple months moving into that bear market, but it didn't slam down by 50% in a day and a half. That's pure price manipulation. So until I can get some validation in a longer pattern that we are dumping below and we're in a full-on bear market, then I'm just going to hold my position and accumulate a little bit more as we're lower. And then I'm going to sell a little bit of my altcoins as we get higher. And I'm just going to rotate it like that until Bitcoin decides on a direction and the market can make up its mind. But aside from that, hopefully this information can continue to keep you grounded in more than just the price and more than just the technical analysis. There's a lot of stuff going on behind the scenes that CNBC or these massive news outlets, they're not going to report it right down the line. They're just going to give the heaviest handed titles that have come out over the past couple of years, and they're just going to regurgitate them over and over again, which is why on this channel I have no problem pulling up every other article from the past and just saying like, well, here's why I do not believe that this is correct. So aside from that, hopefully you learned something, and I'm always honored and happy to have you here. Please drop a like on the video, share with anyone else that you can, and I will catch you guys next time.